Hey everyone, and welcome to another weekly Forex forecast. This one for the week ending November 15th, 2024. In today's video, we are talking about the DXY, the EURUSD, the pound, the dollar CAD, and also gold. So we had a very eventful week last week between the US presidential election and also FOMC. So really back-to-back volatility here for these markets. And this is why I was saying last week to pretty much avoid this entire period through here and just wait for the dust to settle following those events. And you can see why. We had 104.5 here for the DXY, the US dollar index. And you can see where following the US election, we had the market close above, FOMC close below, and into the week closing back above. So this right here, guys, was just complete games being played by market makers. And this is why I was not interested in trading really this week, at least the second half of this week. So looking right now at the DXY, we have the market closing the week above 104.5. So to me, that is really the key here, right? Where the weekly close is going to trump, no pun intended, the daily chart. And so with the DXY closing the week above these highs over here, this is the weekly time frame, you can see the market closing up here, and we do have support coming in down here next week. So 104.5 is going to flip to support. Of course, we could see the market dip just below that, but this area is going to be support here for the US dollar. Now, before you get too bullish though on this market, you do have to consider the fact that the DXY is still holding below the trend line from October of last year. So this is what I talked about last week, and this is why I continue to say you've got to be careful here with this market, just because even though it did close above 104.5, it is still below that October trend line. So really for this market to break out, it's going to have to get above areas like this up here around 105.4. So it's going to have to see a sustained break above here on the higher time frames to expose some of these highs around 106 and 106.50. So obviously if the market does fail to hold above this area down here next week and drops below this area down here, okay, closing below here, then that of course could be bearish for the dollar toward these areas down here. But as of right now, we do have a weekly close above the 104.50 level. So I do think that is going to serve as support for next week, or at least this area between 104 and 104.50. Again, we could see it come down here and kind of sweep these lows first before heading higher. But ultimately, in my opinion, this is your range for next week. So next up, let's take a look here at the EURUSD, which this is another market that I was talking about last week. Obviously being, essentially the inverse of the DXY. I was talking about kind of staying away from the price action through here, right, on this drop. Now, of course, this was an incredible drop. If you were able to get a short up here, even though it was risky, it would have played out really well. But there was just way too much volatility here for this market for me to comfortably trade it. Now, with that said, we do have the EURUSD closing the week below 1.078. So this is why I was saying, just like with the DXY, to kind of wait for this market to sort itself out and wait for the weekly close to see if we were below or above 1.078. So clearly below that mark. So if you look at the weekly chart, I think it becomes pretty clear here what's happening with the EURUSD. Now, one thing that I am considering too, and I want to talk about that in today's video, is that you have here on the weekly, if we go all the way back here to the lows from January of 2017, so way back here, you can see where this low back here, we had a low right here from the euro. The market broke down, resistance right here. It broke down, it then reclaimed it through here. However, notice what happened. We never got a retest down here at this level. And given the fact that the euro is now breaking down, we also have an imbalance of the DXY up around 109 to 110 that I've talked about really for months. If you consider all of those things, one thing that I think we could see here from the euro throughout the rest of 2024 and even into 2025 potentially is a move down here to retest this level. Okay, so right around 1.035, because again, this was a big pivot through here where the euro closed back above. It gave an immediate retest right here, but notice on these lows, we never got a full retest down here toward this level before the turn higher. So given that these are also essentially equal lows, right, there's going to be liquidity sitting below these. So what I think we could see from this market, especially if they're breaking below trend lines like this here, if this holds up right around 1.078 over the coming days, into next week and the week after, etc., if this holds up as resistance, I think we could get that push down here towards some of these lower levels and potentially even sweep these lows down here before we get a bounce from 1.035. Now, I know that that's, very speculative. We're talking about moves that could take weeks or even months to play out. But just given the chart, given the look of it, I do think that that is a potential play here for the euro over the coming weeks and months. Now, before we go on, guys, if you do want a trusted broker, I've trusted these guys for 7 years, and you can trade Forex, crypto, commodities, and indices with them. Check out the link in the description of this video and sign up with Blueberry Markets today. If you are on the website, you can scroll all the way down and click on that link that says broker. Again, I've trusted them for 7 years. I've known these guys, met them in person. They're a great group of people and an amazing broker. And for a limited time, when you use my link, you can get a 30% deposit bonus. Plus, if you deposit $1,000 or more, I will grant you lifetime access to our VIP group. All right, guys. So really, that's what I'm looking at here for the euro. Short term, I'm looking at a potential retest up here in this area next week. So this flips to resistance. If this holds up, then we're looking at a move down here towards some of these lows. Longer term, I think we could get that move down here toward these lows around 1.045 with a potential sweep there down toward 1.035. So next up, we have the pound here, which is still range bound between 1.285 and 130.50. So this is the same range that we've talked about here for the past few weeks. You can see resistance up here, right? So resistance back here, support again here, resistance throughout this entire period. So right now, the market is still very range bound. I favor trading this as a range as long as it stands this way. Of course, if we were to get a breakdown below this area, if the euro does complete that pattern I was just talking about, if we do get that, then we could see the move down here toward levels like 1.27. All right, so that is one possible scenario. Of course, we could also see the market come up here and take out 130.50 for a push into some of these highs. However, for that to happen, the DXY would really have to break below levels like 104.5. So as of right now, I'm still bullish on the DXY. However, just keep in mind that the US dollar index is still below that October 2023 trend line. So you do have to be careful here, right? You've got to be careful. But with the pound, as long as it's below 130.50 and above 128.50, it is a range bound market. One thing to consider here for the pound too, we've talked about this trend line before, but if we are going to see the euro turn lower, the DXY turn higher, etc., then one area to watch here for the pound over the coming really months is going to be lows like this down here in this trend line. So off of this high back here, you can see we have this trend line off of these lows. And so this could come into play here over the coming weeks if we do get the DXY turning higher and breaking out above that trend line from October of 2023. So a few things have to happen still for that to occur, such as the pound getting below this area around 1.285. But if it does open up these lower levels, including this area around 1.26. As I said, though, if we do get the break above 130.50, then you're looking at a sweep of some of these highs up here. So arguably the most straightforward chart in today's video is the dollar CAD. So we've talked about this a few times. And what I really like about this market is the symmetry from the 2015 low back here. You can see where the market has moved within this equidistant channel ever since that time. And the fact that it's coming off these lows down here, we formed sort of a rounded bottom below this key level here. This is also 2 years of consolidation. So like I've said recently, if this market can hold on to this breakout, I do think this could be a quite aggressive rally toward levels like 1.426 or so. So you can see here on the weekly chart, I think this is what it's going to come down to. This is what I've talked about here for the past few videos, is really the daily chart isn't going to matter a whole lot, only because if you look here, again, this is because of the US election and also FOMC. So this is why last week I said it really comes down to the weekly time frame. And as long as this market can hold above this area back here, so 1.387, if it can hold above here on the weekly, which it's doing so far, then this breakout is intact, right? We are potentially looking at that move toward levels like 1.426. All right, so it could be, like I said, pretty aggressive considering the fact that this market has been sideways now for 2 years. There is a lot of pent-up energy here that if this can hold up, and the DXY can break above that trend line we just looked at, right? So if we do get a bullish DXY, then we could see a pretty quick move up here toward levels like 1.426. Now, of course, if the weekly next week were to close below this area around 1.387, then the breakout would be invalidated, right? So this is a must-hold level right now for bulls on a weekly closing basis. But for now, with the market holding above this, it does look like we have a confirmed breakout here from the dollar CAD. So last up, let's talk about gold here, XAUUSD, which obviously all year long, this market has been rallying quite significantly too. I mean, you look at the lows down here right around 2,000 and hitting highs up here right around 2,800. So a massive move here from gold so far this year. So that's first and foremost. You have to understand where this market has been in order to understand what you probably should do here going forward. Now, even though we have a breakdown, the fact that this market has been trending higher aggressively means that any shorts here are going to be risky, right? So I want to say that first and foremost. Now, with that said, you can see that we do have a trend line from August down here off of these lows that did break down last week. We also have these lows right through here, right around 27.13, up toward about like 27.30, 27.40, where this area is going to be resistance next week. Now, support for this market comes in down here at the next set of lows around 2,600. So you've got this high back here and these lows. So this area down here is going to be support. However, you also have this trend line back here off of the lows from back here in February. Okay, so this has not been tested since back here in August. So this is also going to be a factor if we do get that rotation lower. So again, shorts are going to be risky here just given the fact that the market has been trending higher. But I do think given the look of this, we could get that pullback down here into areas like 2,600 before a continuation. Obviously, if the market were to break down from there, then you're looking at the next set of highs back here, right around 25, 26 or so. Okay, so despite the rally that we've seen all year, it does look like we are going to get a potential pullback here into some of these lows around 2,600 here from gold. Subscribe to the channel and click the bell for notifications. Don't forget to join us in VIP. Claim your 90% off lifetime access. See the link in the description of this video, or if you're on the website, click on that join VIP link. Enjoy the rest of your weekend, and I will talk to you again next week.